Good morning, traders. It is Monday, November the 18th. Taking a look at the charts. Last week on Friday, we saw a strong pop in the equities market. More or less, it was consolidating. Let's just zoom in a bit here. It's consolidating in this tight little range for 1, 2, 3, 4, 5, 6 days, and then finally really popped and held this 5-day moving average. And we saw it get to the upside here with a short covering squeeze. And today we're seeing the equities, they pushed up some new highs, and we're just seeing some pretty good selling actually step in here pre-market. And we'll see if this is a significant pivot or not. We are expecting the stock market to try and find a top this week, and this could be a little kind of blow off top and for the VIX to start to bottom. And let's take a look over at the VIX. VIX is up 5% this morning, still trading down along this $12, $13 mark. We've seen this happen many times where it gets down to this level, and then eventually we see the equities market have a big pop in price. And that's where I feel as though we are at. And if we were to take a look at the TVIX we talked about and how it continues to flush down, more or less, we've got the monthly futures contract expiring. We usually see a lot of value disappear in the ETFs and in the VIX this time of the month, and we're looking for some type of knee-jerk reaction pop going forward. And the VIX, the TVIX was trading much lower this morning, trading down around the 680 or 690 level, so down quite a bit this morning. It is recovering now that the stock market just started to collapse here this morning, and it's still below Friday's close. And I'm interested in getting into the TVIX. The big question is, are we into something like this here, a little short covering pop, and we still grind lower, or are we actually into one of these lows here where we get into an explosive move? And I feel like we're very close to an explosive move in the overall VIX and a collapse in the equities market. Now, if we take a look at the safe haven plays, take a look at the chart of bonds. Bonds have had a nice rally last week. They're holding up. They're pinched between the 20-day and the 5-day moving average in a little bull flag formation. And this morning, I can probably stretch it up here. You can see here bonds in the last 30 minutes here really had a strong pop, move to the upside on really big volume. And we can see that as well in gold. You can see another big volume pop. I'll stretch it up just a bit more here. You can see how gold and big volume moving in to bonds and gold. And if we take a look over at silver as well, you can see money's starting to rotate into those safe haven plays this morning. Obviously, there was some economic news around 8:30, and it's definitely starting to drive the market. Now, if we take a look over at let's take a look over at energies. Natural gas down almost 3.3% this morning. So it's having this little bounce. This is what we talked about last week, where it could be something similar to this, where it came up, put in a shoulder and a head, and falls down, and then puts in a strong rally, and then reverses and continues to go down. And this could be somewhat of a neckline across this level here. And we've got the same type of price action where prices put in a shoulder, a head, another little shoulder. It's relatively well weighted. It's not like one shoulder is much larger than the other. It's really only a few trading sessions, and those patterns have formed. And if this continues to break down, I think we could see a pretty good unwinding back down to this 240 level, which is more or less this breakout zone across the chart here from this little basing, this W formation, or you can argue here it's an inverse neck and shoulder, or head and shoulders with the neckline break. So that's what it looks like is unfolding again, something similar to this type of setup. We could see natural gas continue to flush out and sell off and have a fairly decent decline here this week. Looking over at crude oil, down 0.75%. Again, crude has really been struggling at this blue line here where it has big days. It's up 1%, down 1%, back and forth, really oscillating around in here. It gapped higher this morning, selling back down. I'm not a fan of the overall pattern. The overall pattern to me is more bearish. We've got a very strong move to the downside. We're going to have the support trend line, price more or less channeling to the upside, and I'm not a fan of this type of price action as grind higher. I feel as though if we start to get a breakdown here, it could be very significant, as talked about last week, with potentially the 51 level getting reached, and if that's broken, we're looking at the next level is 45 and then 40. We could see a pretty big move down in crude, and that would send the energy sector much lower as well. If we take a quick look at the energy sector, this is the XL ETF. You can see we've got this support trend line that price is testing. You can see prices tagging the 20-day and the 50-day moving average. It does have a series of bull flags. You have a rally, a pullback, a rally, a pullback, a rally, a pullback. You can see each bounce is getting larger going up, which means usually it's getting more and more unstable. It is trading at support level, which is trend line support. It's two moving averages. It's also this previous breakout level. If this starts to break down, that most likely mean crude is going to break down. Typically, we see stocks lead the commodities, just like for example, we'd see the energy stocks start to break down, and then we would see crude oil potentially break down a day or three later. It's the same with the gold mining stocks. They typically break out and lead the price of gold, which is one of the reasons why we got long gold the other week, because gold miners had broken out and outperformed and put in a higher low, higher high. But obviously we had news hit, and a couple news events hit and drive the miners and gold down, kind of negating the breakout in miners, although I do feel as though they'll continue to head higher once this new bottom gets formed, and we'll be looking to get long again going forward. But overall, the energy sector could be an early warning for crude to break down, and the energy sector could very easily collapse and break this potential low and go much further, very similar to the price of crude oil. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.